Welcome. I am Eric with Mother.com, and I greet you, beloveds, in the love and in the light of the one infinite creator. So for this weekend's market analysis video, I'm recording this with about 30 minutes or 35 minutes before the market close here for November 19th, 2021. The Nasdaq did record a fresh all-time intraday high, and I believe the S&P 500 tagged a new all-time intraday high. For this week, we've seen the cryptos pull back slightly or significantly, depending on your point of view. Ethereum right now at 4296, right there. And a quick snapshot of where BTC is trading, and it is currently at 57890. All right, let's go to the charts. A quick look at how the market has done this week so far. We can see the Nasdaq up 1.2% for the week. S&P 500 is also slightly positive, up about 0.34. Let's call it unchanged. The Dow is down the most for the major averages, down about 1.4% as of this moment. And we can see for the week, Bitcoin down about 11-12% as of right now, and Ethereum down about 7 to 8% for this week. Let's begin with the Nasdaq Daily. By the way, it is my intention to discuss commodities, some world markets, and cryptos towards the end of this video. All right, let's take a look at the Nasdaq Daily. So Nasdaq is giving us the potential for a fresh daily breakout. And let me give you that number to watch. It's a number we can use in the short term for guidance. As long as the Nasdaq is above this number, we can say there's a fresh momentum daily breakout and we can anticipate higher prices. So that's the number. Above this number, and the bulls are still in control. Day to day, if we end up rolling back below this number, that can set the stage for some type of a meaningful pullback. We shall see. And let's also take a look at the S&P 500, give you that breakout level for the S&P 500 on the daily. S&P 500 also doing its best to break out, and the number here is 4701.70. Right now it's slightly below it, but above this number we can say the bulls are staging a day-to-day breakout and possibility for improved all-time highs, and failure to break out could start setting the stage for some type of a pullback. Now remember, we're going into a holiday as of Thursday. So usually whenever there's a public holiday over the last so many years, the market's been trading at new highs. Conveniently. Wink, wink. I also should point out here the S&P 500 seems to be struggling slightly. We see a recent day-to-day double top on the S&P 500. And sometimes that's just how pullbacks begin. Of course, in the short term, and I'm talking day to day, if that's your time frame, the S&P 500 would need to move above 69.1 if it's going to see some day-to-day movement to the upside. Now, let's take a look at the weekly for the Dow, since the Dow is the one that is down the most. And if we take a look at the breakout level that we've been using, and that level for the Dow is 35,515.38, which is this weekly closing high from the month of August. And so right now that breakout is being tested after spending a couple of weeks above it. So of course, for market structure to remain bullish, those who are bullish would want to see the market hold around here as far as the Dow is concerned, so the Dow can build to the upside. Because this breakout is so well defined, a break below this price would actually start setting the stage for a more meaningful pullback as far as the general market is concerned. In other words, if the market is to continue higher, being stable and bullish, this level on the Dow weekly would need to hold. Now, if you remember from last weekend's market analysis video, I had proposed this line here to be the line to watch. Seems like the Dow is aware of the line. After this resistance in August, it's come back here in November, early November, and we tagged it, and now we are pulling back. Now, if there's going to be a more serious decline, then we'd have to break the RSI lows line. In other words, if there's going to be more downside, this line connecting recent RSI lows on the weekly would have to break if the market is to see lower prices. Also, this line is where the Dow is currently trading, so it could also act as support as we build for another push to fresh all-time highs. Now, something that is developing as of this moment that should be of concern to those who are bullish is the monthly for the Dow. We can see the Dow is slightly negative, about 0.5% down for the month. So not the biggest down move. So 0.5% is nothing. But at least we can also appreciate that this resistance at the RSI 69.1 could just be the beginning of a major top. This could eventually be an issue, or this could eventually be the signal that began the big slide. So we have to be very sensitive to the Dow remaining below this level. In other words, the more the Dow drifts farther and farther away from this level, the more it seems and the more the market is going to be telling us to prepare for a massive plunge in the market in the months ahead. If the Dow and the general market are to continue with this recent bullish one, then the RSI for the Dow would have to reclaim the 69.1 threshold. So I would say this is one of those charts we continue watching and tracking to see whether this deteriorates. Now, we can also use the monthly breakout for the Dow, and let me provide that number again, which I provided last week, but I can do it again. We can see here 35360.73 is the 73 is the monthly breakout level. So as long as the Dow is above this number, the monthly breakout continues to be intact, and we can anticipate that the markets are still stable. Now, if we end up breaking below this area or this price, and the RSI continues drifting below 69.1, then the stage would be set for the beginning of a major move down, aka a bear market potential, that is. A quick look at the Dow Transports weekly, and similar to the Dow, we can draw a trend line, a search on the RSI, connecting the lows of early 2020 and this slight pullback here this summer. And so we see that we've gone above the line and back below it with uniform action. This tends to suggest that this is a potential trap if it stays that way. Now, yes, the weekly RSI is suggesting that things are pointing down as of right now, but the price has yet to break down from a breakout perspective, because we broke out a couple of weeks ago and we are still above that breakout level. So if the market is truly desirous of going lower, the weekly breakout must fail first. And so let me give you the price watch. There is 3515 375.77, which is from the weekly closing highs as of May. A break below this level would really signal that the market is now setting the stage for a strong push down. Having said that, on the monthly for the Dow Transports, they are, albeit above 69.1, but it's very slight. But still, the Dow Transports are still holding above 69.1 on the monthly. And we know that if we end up being rejected with uniform activity, if this just rolls over, and if this is rejected on the monthly, then that would set the stage for some meaningful top. Maybe this top right here, just maybe, is a high the Dow Transports will never see for another, let's call it 3, 5, 8, 13, 21, 35 years. It is possible that this high could be a major high. Now remember, it would be similar in a sense to this period here, where we eventually were rejected at the 69.1 threshold, and for the Dow Transports, this was good enough for a top in 2018. Now, there's a possibility, it hasn't happened yet, that we do the same thing, and that this, if the Dow drops below, Dow Transports, if they drop below 69.1 with uniform activity as mentioned, that would be similar in a sense visually to this period here. Now I have to say most of this gain or most of this spike in the Dow Transports can be attributed to this move by Avis. So this stock had a massive push. This is the monthly, and you can see it's really come off its highs. Hence why the Dow Transports have come off their highs. And it is safe to say, in my opinion, this stock might not be seeing this high for another 5, 10, 20, 30 years, if ever. So you can see the correlation there is maybe even the Dow Transports eventually reflect the overall trend and direction of the instrument that led to that big spike in the Dow Transport. I would say this short squeeze event is one and done. In my opinion, it ain't going back to 550. Probably not in our generation. Now, let's not forget, having said all that, that the S&P 500 still remains above that bullish threshold of 69.1 and continues to record fresh all-time highs week to week, month to month. And as long as it is above this threshold, one can anticipate a strong, stable market. The Nasdaq, of course, has been in the leadership because it jumped back above 69.1 all the way back to October of last year and continues to hold above 69.1 over the last 13 months or so. And hence, it still is recording fresh all-time highs. The more it stays above this threshold, chances are we might go into a very sharp climatic finish to this move. And of course, what's been pushing the Nasdaq is the behavior, the powerful move by the Semiconductor Index. And you can see that Semiconductor Index, in fact, has been above 69.1 on its monthly, going back all the way to June, July of 2020. And you can see that the more it has held above this threshold, the more we are starting already to see the hyperbolic move. This area here is an area where there's a lot of tremendous power. And you can see that it can hold above this threshold for years when the conditions are correct. In other words, whenever you see a major sector of the market move above 69.1, it's the market telling you that this is where you need to be paying attention to, because that's where there's potential for a strong push higher. Now we're taking a look at 18 years of monthly data. So 18 years, monthly for the semiconductor index and SOX. You can see how that 69.1 threshold captures the bullish phase. Entry here, exit there. Bullish phase above 69.1. Entry here, exit here. And all of these periods were lasting more than 1 year. Entry here, and still no exit. Now, if and when this instrument is going to be due for a major break of this momentum, in other words, the next major down cycle would have to come when we break these lows. These lows connecting all the way to 09 and recent lows. This line would have to break before the semiconductor index can enter into a so-called bear market. And you can see that's gonna be a ways out in the future before this potential for this break can even happen. So it's a great chart to study. And by the way, how about that RSI 50 uniform activity support? All of these pullback zones have come with RSI 50 support, just so that next time it happens, you know what it means. All of these supports would eventually lead to fresh highs. All of them. As research would show, is every time you have uniform activity bounce, you're going to test prior highs and maybe even improve on it. Another breakout after testing the RSI 50 went to new highs. All of this led to new highs. So understanding RSI 50 uniform activity bounce can help you gauge and anticipate where prices are flowing. Oh, and just for the record, that big drop in 08 needed a break of the trend line. And that break of the trend line took place right here in 07, late 07, before the famous or infamous crash of 2008. This break was a sign that there was some serious downside to be had, which was, of course. Oh, and while I was recording, the market did just close pretty much where the market was when I started recording. So the Nasdaq was up, S&P 500 was almost unchanged, and for the week the Dow was down about 1.4%. Now, as we are all aware, Tesla's had a big run, especially if you consider where it's come over the last couple of years. This stock has had a big run, and it is attracting a lot of attention to that area, that space. So again, on the monthly, huge run up in this stock. And if you missed the breakouts on the monthly, dang. I mean, they were kind of, I want to say obvious, but these breakouts were there for anybody who plays breakout. Entries were right here. And the monthly, of course. I hope you didn't miss those breakouts because the signals were pretty straightforward. But then again, there's always the next one. Now, we can see that the market is showing a big interest in this sector of the market, autonomous driving, self-driving, and we can see one of the recent IPOs had a big spike, and I'm sure you all know this, RIVN, Rivian Automotive, and I believe at some point it might have a time to digest this gain and potentially a fresh breakout down the road. So of course you want to be paying attention to any future breakout in case there's more upside. The other stock that has had a nice run, or at least is setting the stage for a nice run, is Lucid. Now, of course, this stock had a prior run in early this year, 2021, cooled off in this phase here. So not the best setup, I would say. The reason why I say that is this was a big reversal here. And we can see right now it is doing its best impression for a fresh breakout, hence the alert. And sure, it might seem extended, and one can say is extended. This is the 2-year weekly, but as long as the weekly breakout is intact, you never know. These things can take off and not look back. And yet at the same time, if this weekly breakout fails, then there's probably a reason to anticipate some sideways action before any future potential breakout. Or sometimes a failed breakout, as we know. Failed breakouts, if it happens, are notorious for taking instruments down. Now, when the marijuana stocks were on fire, this was potentially the leadership stock, and it moved, had a big run, 20 to 300, big run. So the marijuana space was moving very nicely, but you can see since then, the space has collapsed. So just because they can move higher doesn't mean that this is not the potential major move in the months ahead. Another good example is what happened to renewable energy stocks as of 2020. They were on fire last year, and I hope you caught most of those breakouts. They were there for the taking. And this breakout in the solar space ETF was as clear as it gets. So I hope you caught that breakout there. But since then, in 2021, we've seen massive pullbacks in this space. Now, unless they break out again, at some point, a breakout is needed. That is the only way to recapture momentum to the upside. Otherwise, without a breakout in the space, you never know whether this sideways movement is a preparation for this. So again, using the breakout concept, we are waiting for a fresh breakout, and at the time of the breakout, we can reevaluate the charts to see whether they meet the minimum requirements. If they meet the minimum requirements, then we don't ask questions, we play the momentum breakout. So in other words, some of the stocks that are moving right now could be just in favor for now, and you never know, the next major trend could be down. And let me give you another stock that recently had a big spike, RBLX, Roblox, and the breakout alert that I sent out to clients was around 109. I think 105. I don't remember. Maybe 109-ish. This is the weekly chart. So by the time I give the breakout, this had already happened. It spiked. And so we had to wait for a daily entry. And we can see the daily entry. So there was a big spike on this day right here. So didn't want to chase it there. So we set a breakout alert for about 109. So I guess I was correct. And this week we saw it break out. So those are just some of the leadership stocks